Hello, everyone. I'm delighted to be your moderator for today's webinar organized by Funds for NGOs. Today's topic is financial risk management systems for charities. First of all, I want to thank each one of you for taking out time from your busy schedules. This webinar will run for 60 minutes, which includes a 45 minutes of presentation, followed by a 15 minutes of Q&A session. If you have any questions, please use the Q&A option on your webinar screen to post your questions, and we will respond to them during the Q&A session. Let's begin with webinar's objective. The first objective is to understand the importance of financial risk, implications for NGOs, to recognize the basics of effective financial risk management systems, to learn about key sources of financial risk associated with the charity sector, to create a platform for NGOs to discuss effective financial risk management strategies. Please note that the webinar is being recorded and the recording will be made available in the video section of the Funds for NGOs premium website. And now allow me to introduce today's trainer, Dr. Christopher A. Johnson. Dr. Christopher is an award-winning journalist, editor, publisher, and business management consultant since the 1980s. He is also a former Commonwealth Nuffield Cambridge Press Fellow, Management Science Fellow, a certified Commonwealth Youth Worker, holder of an MBA in Marketing Management and a doctorate in Business Management. He is renowned for his visiting tutorials in bid writing, business planning, leadership, marketing, and organizational development, capacity building. He is both founding director of Global Entrepreneurial Development Services Limited and chair of Community Education Academy of Leadership. He supports economic and social policy initiatives in Africa, the Caribbean, the Middle East, and South Asia. Now, I kindly request Dr. Christopher to lead the session and share screen.
Thank you very much, Madam Moderator, and thank you very much, everyone, and welcome to another edition of the webinar. I'm sure that you can see the screen.
Yes, it is visible.
Okay, and as the moderator rightly said, this particular presentation looks at or explores financial risk management systems for charities. And what that topic means is that we'll be looking at different risks associated with finance, but also risks that are associated with charities and other not-for-profit organizations. We'll be looking at financial risk, what it is. We'll be looking at the classification of such a risk. We'll be looking at the features that are associated with financial management risks. Also looking at what are the common financial risks that are associated with charities, the kind of techniques we need to identify those risks. Obviously, we'll be looking at monitoring and evaluation tools, the kind of technology that is associated with either risk reduction or risk alleviation. We'll be looking at cases involving financial risk management and, of course, strategy for helping, if not reducing, risks associated with NGOs. So what is financial risk? Financial risk is any risk that involves not just funding or resources, but any risk that can affect an organization's operations, whether it be its structure, the way it conducts its recruitment, selection, and placement, that's staffing, volunteering. It can also have a risk associated with credit. So, for example, if the organization owes a lot of money to some individual or some institution, there can be a credit issue there. And of course, liquidity refers to the amount of money that the organization has in the kitty, or that it has in the bank or in its savings account. And you notice there, we look at several currencies across the world that are associated with NGOs generally. So a financial risk rarely is a risk in itself. It is, some people see it as negative, but it is also an opportunity in order to reduce, if not eliminate, some of the risks associated with the organization. And so there are several classifications of risks that are associated with not just non-governmental organizations, but public agencies, private sector, institutions, and so on. And so we've divided the classification of risk here into two aspects. One is systematic risk, one is unsystematic risk. Systematic risk really are risks that the organization cannot control. Those are risks that are external to the organization. So if you have market turbulence in terms of finance, or volatility in terms of economies not functioning well, if we have trade disputes or trade imbalances, if we have currency devaluation, if we have low productivity within the country, or the GDP ratios are very poor, well, then you would expect risks to be impacting on NGOs, because NGOs obviously would have to respond to that risk as well. And of course, all of these things are associated to demand and supply chains. And if your supply and demand chains are very expensive, it will have a price risk effect on the organization. If you have to buy materials and equipment, whether you're into manufacturing or service, you will still be affected. In terms of your purchasing power, of course, that will be affected as well. In terms of unsystematic risk, these are risks that cannot be controlled, that could be controlled by the organization. So they are seen as controllable risks. But even in terms of controllable risk factors, you still have issues of uncontrollability. So for example, if we are looking at employing people within the organization, even though you have some semblance of control, an uncontrollable risk could be you don't have suitable people who can be employed. So for example, you might be looking for a finance officer, but somehow you don't, you're unable to recruit a finance officer with years of experience in not just accounting and financial systems, but someone who can actually understand new regulations in finance, be it taxation, national insurance, or even credit policies that are implemented by governments from time to time. So that could be a risk itself. Another controllable risk, which we see here as sovereign risk, this could also be problematic, because if you have no understanding of the sovereign wealth fund of a particular country, and this is a fund that involves billions and billions of dollars or pounds or currencies that are invested in by large companies, conglomerates, international funding bodies, and even the government. That fund is used to invest in capital expenditure, capital projects. So not every NGO will be able to control that particular risk. Exposure rate risk, yes. Some organizations have in place certain systems to deal with that risk factor, but not every organization can deal with that. But these are just different types of risks. The other risks that we should talk about are operational risks. And this is where the organization itself has to look at whether its constitution, its governance documents, and so on are legal or fit for purpose. And then, of course, the political risk, even though it is controllable, it is also not controllable by the NGO, because you cannot control ideology, you cannot control political behavior, you cannot control how politicians actually behave towards NGOs. You cannot. So these are some of the risks that we need to look at from time to time. And then, of course, there are features of financial risk. These are very, very important to the organization. These are risk factors that are associated with different features, different sectors. So, for example, with corporations, they have identified that they have 20% risks. 30% is about risk modeling. This is when they're analyzing kind of risk. So you identify the risk, you analyze it, and then they report the risks. They publish that risk, and then they try to introduce regulations or look at where regulations can be put into action. And then, of course, they monitor it, and then they integrate the different systems and procedures to make sure that the risk is reduced. So that is based on what corporations do. Charities, again, this 15% in my view is very small, because there are more charities that can actually identify risk. And that is something that we need to know how to go about analyzing risk. What is it you look for, etc. And so you can look across the screen there to see how not-for-profits operate. You will notice that in terms of integration capabilities, it's just 5%, which means that they need to do more. Financial institutions, of course, they have a risk identification factor as well. The healthcare, manufacturing. You'll see in manufacturing, because of the kind of sector that they're involved in, they deal a lot with distribution, supply chains. They deal with systems, processes. They deal with trade, commerce. And so their risk identification would be far more than any other organization or sector on this particular screen. But these are just examples of the different features that are associated with financial risks when it comes to certain sectors. And so it is something that you need to focus on as an NGO as you go on from time to time. So we were talking in the previous slide about some of the risks. Now, these are the risks that are associated with charities, financial risks. And you would notice there that these risks are very much, let's look at the percentage focus. So charities that are involved in humanitarian issues, for example, disaster preparedness, flooding, natural disasters, conflicts, wars, etc. You know, these are some of the risks that they have. So the risk includes funding, that is actual funds, whether it's donations, grants, or capital funding. They also have issues with operations. So sometimes they have difficulty in actually delivering programs to specification because they don't have sufficient manpower or woman power. Compliance, because of the change in compliance, the change in regulations. Some organizations struggle because they have to comply with changing international standards. Liquidity, sometimes they have problems with funding, cash flow, they don't have sufficient funding. And so they cannot respond quickly to environmental situations, humanitarian situations. Education charities, they have issues with compliance as well because, again, rules and regulations keep changing. If the funding environment keeps changing too, they have a problem with that. And of course, they can also have issues with operations. So if you look at all those three charity areas, and these are just three sector charities, but all of them have the same issues with risk. The percentage might be different, but these are some of the common denominators or some of the common risk factors that are associated with charities all over the world. And so in the two previous slides, we were talking about how can NGOs assess risks? How could they identify the risk? How can they monitor that risk? But before they do all of that, they have to identify it. In other words, they need to know what are the risks? You know, how do you go about actually understanding where the risks lie in your organization? And so some of the techniques we suggested here is that you need to do brainstorming, which means you meet as a group of trustees or board of directors, along with your volunteers, probably external individuals as well, partners, and you identify where the risks are. You might decide that there are risks in terms of finance or operations, staffing, risks in terms of data protection, risks in terms of strategy. Maybe you don't have a business plan, and that can create a risk in itself. So you can certainly use this form of risk identification, but of course it has advantages and disadvantages. So one advantage, of course, is that you will have more people participating in the brainstorming section. But the disadvantage is that, you might ignore the risks that are associated with stakeholders. So you might have another organization telling you that, look, this is what you need to do. And you might decide to ignore that stakeholder or not even invite them to that brainstorming meeting. And then you have your strengths, weaknesses, opportunities, and threats profile analysis. And this is where you take a broad view of the organization. You look at the organization from top to bottom to find out what are some of the challenges, what are some of the risks associated, and how those risks or those threats can be met. One person's strength could not be another person's weakness. One NGO's opportunities could be another NGO's threats, depending on how you view it. But again, there are advantages and disadvantages with that. But a SWOT analysis, in my view, is a very important strategy to adopt. And then, of course, a risk checklist. And this is where you actually, from your day-to-day running of the charity or the NGO, you will know exactly what are some of the problems. You get volunteers, for example, to have a checklist. And that checklist is to look at what they're doing on a weekly basis. And they write down what are the challenges affecting them. Is it the attitude and behavior of service users? Is it the way in which organizations communicate with them, or do they have a hard time, for example, accessing schools, universities, colleges, or other education institutions? Those are risks in themselves. And then you have stakeholder interviews. This is where you have conversations and discussions with your funders, with your sponsors, people who are likely to give you money. They may not have funded you before, but have conversations with them and identify some of the issues you have within the organization. Ask them for advice and guidance, how they can help you. Yes, it might be time consuming, but at least you would learn a lot from these different donors and other agencies. And then, of course, your scenario analysis. This is where you explore modeling, how you go about developing certain analytics. So you look at the risks qualitatively, how it impacts on people, and you also look at the number of people who the risk or risks would impact on them, in terms of their behavior, their attitude, whether it affects their employment, their education, their training, and so on. And then, of course, expert consultation. This is where you consult with experts, professionals, practitioners, people who have a lot of experience in a variety of sectors and industries. You get their advice on how to deal with risks, how to reduce risks, how to minimize risks, and how to set up systems in order to deal with risk factors. And then, of course, you have your capacity building sessions. This is where you have workshops to discuss how to go about identifying risks. You look at defining risks from a different perspective because there's a difference between financial risks, operational risks. There's a difference between political risks and economic risks. So all of these various classification of risks you need to look at in terms of your techniques for risk identification. I know it's a complex presentation, but at least we're trying to simplify some of the techniques that you need to apply. And every technique would be relevant to every charity. Some may be different. So for example, the techniques that would be most appropriate for smaller NGOs would be brainstorming, SWOT analysis, stakeholder interviews, and risk workshops. I repeat, brainstorming, SWOT analysis, stakeholder interviews, and risk workshops. Those would be the ones that you can identify to help you in understanding the different types of risks. Like every challenge that we face in our organization, our organizations, we need to make sure that we have evaluative mechanisms in place, tools in place, instruments that we can use to monitor how these factors relate to our organization. And so in the case of risk factors, we can use what is called real-time financial dashboards. These are metrics that you can access to you can use Microsoft Excel, you can use other database management techniques or other accounting and financial software programs, and they can help you to analyze risks. So for example, you can do an income and expenditure forecast analysis. You can then look at what is in the bank, and that will give you an idea as to what is happening in terms of finance. And according to the experts, you will have 30% success rate if you use that particular approach. And then you have audit trails. This is where your accountant or your finance officer, who is a specialist in accounting and financial procedures, will conduct an audit. An audit is where you look at the entire organization from top to bottom. You look at its entire budgetary requirements. You look at its transactions over a particular 12-month period, looking at income and expenditure, looking at receipts, invoices, and other financial instruments, your bank statements, and you use that information and data to track whether or not there has been fraud, whether transactions were poorly done, or whether money wasn't spent properly, etc. So these are some of the tools that you can apply. And then, as I mentioned, you can also use software to track where money is being spent, where there is a shortage of funding, where there are issues around liquidity, shortage of cash, etc. You can also use data analytic tools. These tools would give you information on what has happened in the past, let's say the last year or two, and what's happening in the present. It will also help you to track the trends that donors have. What is it they're trying to accomplish? And again, you can look at information from donors, from their newsletters, their bulletins, their reports, and you can use that to factor in what is happening with donors. And then finally, your compliance monitoring system. This is where, again, you have to make sure that you have a quality control handbook. This is a handbook that comprises or consists of all the regulations governing the charity. It talks about when the charity was established. It talks about the different systems you have, equality systems, vulnerable adult policy, children's policies, and a range of other policy measures that you need to consider when you are running an organization. So these are very important tools that you can use, and all of them, I might add, are important to NGOs. I think the most important ones, of course, would be the audit trails, data analytical tools, or data analytics tools, and the compliance monitoring systems. Those three are very, very important for any NGO that is operating in the world today. We cannot exclude technology from risk financial management systems. And the reason why, because technology helps to facilitate, it helps to provide support, but it also helps us to show where the problems lie. And alternatively, the technology also helps us to find what is called potential solutions to the problems we have. But that technology can only work, of course, if we identify very clearly what the risk factors are and we key them in to that particular system. And so the technologies that have been suggested here are based on what we suggested earlier, automation and efficiency. This is where the technology can pick up errors that have been there in the system. It can improve systems. We spoke about Microsoft Excel, but you also have QuickBooks as well. QuickBooks, it's a software program that helps to reduce administrative costs, but it could also be costly depending on the amount of transactions you're conducting. We mentioned real-time analytics. Cybersecurity, very important here. This is where we are looking at protecting financial data, but you're also protecting the data of volunteers, staff, stakeholders. You need to make sure that you have proper software encryption passwords, and it builds trust and integrity. Of course, you need to update this every time. The integration collaboration is very important because you need to link your financial data with information from donors. So as information comes in, you look and see where funders are targeting, you develop a budget for that, and then you link it within your central planning database to determine how you can actually improve your risk management systems. And of course, this is called enterprise resource planning. And this helps to enhance and make your operations far more effective and efficient. For those of you who are interested in using AI or artificial intelligence tools, you can use AI to identify what is happening, but AI would only give you what is called a forecasting structure. In other words, you might type in, how could I identify risks in my organization? How could I reduce or mitigate those risks? So AI would give you some answers, but those answers will be dependent on the kind of risk that you've identified. So first of all, you need to identify the risk first before you ask AI to help you with a forecast to address that financial risk. Because a lot of it has to do with algorithms, numbers, language, information, data, and so forth. And finally, on this screen here, transparency and compliance. It is important that you have a reporting system. So for example, every year you're supposed to submit an annual report and a financial statement. That is something that is legally required. That's a legal requirement for NGOs. And so some organizations don't know how to do it. They have an accounts person, they have a treasurer, but you could also use software to help you with that. But there's no better software than the human mind or the human brain. So whatever software you have, you still have to input that information, and that information has to be accurate. So again, if you're using technology, make sure that you have raw materials in terms of information and data at hand so that it can help you to improve and efficientize your risk management systems. There are so many cases of financial risk management situations across the world. And this is a piece of research that was done by an organization called Griffiths and Armour. They are people who examine and conduct research and investigations into charities in terms of fraudulent behavior. And you would notice there that charities are not risk averse. They are susceptible, they are vulnerable to fraud, they are vulnerable to all kinds of financial crimes, including technology crimes as well. And so in terms of fraud, most of the NGOs that were interviewed by this particular organization, 50% of them spoke of internal fraud. That is, embezzlement of funds either by trustees or by volunteers or by people who are in charge of events, programs, and activity. And they said, of course, that that activity had a financial strain on the organization, which meant the organization struggled with finance. And the suggestion was that you should have financial controls in order to improve that situation. 29% of the charity said they were external fraudsters, and that could be people using the organization's bank account, or it could be people are spending money without permission of the organization. But there are so many issues around external fraud. And of course, it impacted on employees and volunteer distrust because obviously the employees who manage the volunteers are not sure how to deal with it. And the solution, of course, is whistleblowers policies, which means that people within the organization should be protected because most times this kind of information is volunteered by people within the organization. Another type of fraud is misappropriation of cash. Again, this has a lot to do with the internal operations of charities. Sometimes the director or the trustee who has 50% control of the assets of the organization, some do. CBOs also have some of that. The person can mismanage the fund by spending money on a personal effect. It could be buying some luxurious item or paying for some domestic good or service. That is also a misappropriation of funds. And that could also reduce the efficiency of the operation. And then you have payment being diverted, meaning that rather than the money being spent on the organization, it is being spent on a personal effects. And then you have expenses related fraud. This is where the monies that are allocated for expenses are either underspent or overspent, and that could also indicate some degree of internal malfeasance or internal corrupt practice. And the way to solve that problem is to make sure that you have transparent financial procedures and you have cybersecurity measures in place where the finance officer can have access to not just information, but the secretary or the treasurer or the director should be able to have access to that information that is put on the screen or electronic mail by the finance officer. And then you have the financial impact of mismanagement of resources, and that could that could incur losses. 84% of charities said that they experience financial losses. They receive less funding because of that. And of course, the way to solve that is to make sure that you have a proper system of auditing where your accounting books and financial systems are audited every year. One of the other challenges or one of the other problems that face charities or NGOs, of course, would be reputational damage. And so over 75%, which is over 3/4 of charities interviewed, said that their reputation was undermined because of fraud, because of financial irregularity. And of course, that could affect donors because donors start to question whether the organization is the right organization to receive funding. And the solution to that, of course, is to have fraud awareness sessions, training people in financial management, budgeting, accounting, costing, or letting them understand the value for money indicators that are needed for every project and why money is spent on every item of expenditure. All of these things are important. And so 50% of the organizations interviewed, that is half of them, did expect that fraud would rise. And so that itself shows that organizations need to be prepared to deal with these issues that will affect their structure. And the way to do it, of course, is to put in place systems that you can improve the way in which you function as an organization. And finally, we are looking at financial risk management strategy. We will go through this step by step. We still have a bit of time, but it is important that we understand, again, what is financial risks. As I said, financial risks are risks associated with the way in which monies are accounted for in the organization, the way how monies are budgeted for, the way how programs are planned, how they're organized, and how they are actually brainstormed. And so the first strategy that you need to put in place for a financial risk management strategy to be effective is to look at different types of funding. This is something that we advise NGOs and charities to do. Don't depend on one single funder. So, for example, if you're running a series of programs for young people or for women or for elders, do not depend on organizations that fund young people only or fund women only or elders only. But, look for organizations that fund other activities within your project. So they might want to fund training programs. They may want to fund information, advice, and guidance sessions. They may want to fund research sessions. So make sure that you have multiple types of funding sources so that you can reduce some of the risk associated with less funding. And then once you do that, make sure that you have the necessary system in place, either the software program or you publish the different types of funding and what they contribute to. So you make sure that you have information on that in your system. And then you conduct an evaluation by looking at the amount of funds that the donor agency or the organization has contributed. And then you look and see how that funding can work for the organization. Is it 2 years, 3 years, 5 years? Because obviously you're looking at stability. So it is very important to focus on that. And once you identify funding, then you look at budget planning and monitoring. So then you develop your project specification. In that project specification, it has the different project activities and programs, events, how many people will be involved, how many people will be indirectly involved. Those are people who will attend sessions and indirectly benefit. How many members of staff and volunteers you hope to have. And so once you conduct that planning mechanism, you then use the funding to allocate resources to meet the operational needs of that project. And then, of course, you have your impact tools like your QuickBooks or your Microsoft Excel to conduct what is called your analysis. And then, of course, you would conduct an evaluation of the budget so that you can make sure that there is no mismanagement of monies. Again, find out, get quotations from different organizations that you're buying products from or stores that you would be getting stationery from to determine prices, etc. So you could use a sort of variance analysis to find out prices. And then another strategy would be fraud prevention and control. This is where you have a system in place to measure or to gauge where fraud is likely to be committed. So for example, if you have a budget for staffing, you have to make sure that the person who is going to spend expenses, for example, you might have staff expenses or voluntary travel expenses, you have to make sure that the expenses that are budgeted for are spent and are not misspent. In other words, if you have £1,000 or $1,000 or 1,000 rupees earmarked for travel and subsistence, it should be 1,000 rupees or pounds or shillings earmarked, and that should be spent. And the way you make sure that that happens is that the person or persons provide receipts or travel tickets or any other financial instrument as evidence to show that that money was spent. And in that way, you can be able to use that to do an audit trail to determine whether or not the person has spent the money. And you can be able to detect whether or not there is potential fraud or actual fraud or fraud that will be committed in the future. So these three are very important. And then you have liquidity management. This is where you look at how funding is taking place. You look at your cash statements, your bank statements to see where money is coming in, where money is going out, and that will help you to monitor what is taking place. And finally, make sure that you have your quality control handbook or your quality control procedures so that you can comply with systems of governance. And so today we focused on a very important topic. What is financial risk management systems for charities? We looked at the financial risk. We looked at the classification. We looked at the tools that are required, the techniques, the importance of technology. We looked at cases involving charities and financial risk management. And finally, we focused on financial risk management strategy. Thank you for listening. And at this time, I'd like to avail myself for any questions you may wish to ask. Thank you.
Thank you, Dr. Christopher, for the insightful session. Participants, now we are taking questions, so please send in your questions. The first question is not clear about those percentages of features of risk in section 4.
Yes, what those features simply mean, that was a piece of research that was conducted, as I said, by an organization, and what they were looking at is different different features of risk identification analysis. In other words, they were looking at how charities and NGOs can analyze and evaluate risks and how they can do it in a methodical and systematic way. And so they were focusing on key sectors. And if I might just go back a bit, they were looking at, first of all, how you identify risk, because that's important. Before you actually set up a risk assessment and evaluation system, you need to know what the risk is. So that was the percentage ratio. And then risk modeling was what kind of assessment and evaluation strategy you will develop. And then, of course, how would you report about that on that risk and how you monitor it, etc. So those percentages really were looking at different organizations and how they see risk and how they try to associate that risk with the different sectors that they have. And as I said, this presentation will be sent to you as well anyway. Thank you.
Thank you for your response. The second question is, what kind of softwares are available for liquidity analysis? Are they free?
These softwares are very expensive. I would say start with QuickBooks to give you an idea of what is in your kitty, because these softwares can only be efficient and effective if you have what is called raw data. So you can take that information from your what is called bank statements. You can also take it from your accounts, your latest accounts or most recent accounts, and put that information within a software program, and you will get the necessary analysis. Don't expect the software to do everything, because you as humans have to input that information. But I would say that, try QuickBooks initially, or even Microsoft Excel to some extent. Thank you.
Thank you, Doctor. The next question is, how can an accountant or finance officer set up internal control to minimize fraud risk in the organization?
Well, the first thing the account or finance officer has to do is to conduct an audit. I did mention that. An audit is where you assess, evaluate, and then you make recommendations. So you look at the entire organization, you look at the way how receipts are handled, you look at the way how invoices are made, for example. Because if you are producing invoices, you have to make sure that you have the name of the organization, the name of the person who the invoice is going to, The invoice has to have a reference number. It has to have the type of activities that the invoice is being made out to. The bank account has to be correct, the sort code, the account number, and all of those things have to be done, and the date, of course. So these are very important. They're elemental, but they are important to the process. And then, of course, how often does the organization pay its volunteers or its members or its directors for that matter? What are the payments that are not seen on the account? What cash transactions are conducted? So that is why I suggest that you need to conduct an audit of the entire organization in terms of its operations, its activities, and so on. And having conducted that audit, that will give you a better idea as to uh, where the issues lie in terms of internal funding, etc. Thank you.
Thank you, Doctor, for your input. The next question is, how often should NGOs revisit and update their financial risk assessments?
I would suggest you do that every year because systems change from time to time. You may not have access to funding every year, but by updating your system or systems, you'll be able to know exactly what's happening. Because quite often when you submit an application for funding, one of the questions that is asked is what accounting and financial systems do you have in place? And if you say we don't have any, well, you're in trouble. So it is important to update it every year so that you can include that information or that fact in your application for funding.
Thank you, Doctor, for your input. Participant is asking, are there free softwares that enables invoicing processes that is environmental friendly?
As I said again, you can use Microsoft Excel and QuickBooks. There are other software programs that are out there, but they're very expensive. That is something I'll probably have to research, but on the top of my head, we use QuickBooks and Excel. And of course, we have an accountant who does the books for us. And I think that it's important not to do it yourself, but to have an expert who is good at not just accountancy and finance, but who understands taxation systems, national insurance, PAYE, pay as you earn, and other forms of taxation, because finance is a very complex area. And so I think it's important to get an expert to do that rather than you trying to do it yourself. That is just some expert advice I'd like to offer. Thank you.
Thank you for your input, Doctor. The next question is, how can directors of CBO pay themselves while also trying to stabilize the organization?
Well, you pay yourself on the basis of projects. So if you're running a project, if you're a project officer or a project administrator or project director, or you are a researcher, whatever you budget for, whatever posts that are budgeted for in the project itself, those are the posts that would be paid. So you can't pay yourself as a director or a trustee, depending on what position you hold in terms of that project. There are some charities and other organizations that allow charities to, if you like, to run projects. Their trustees might have a particular skill in finance or project development or communications or public relations, or might have a skill, let's say, in sports, for example, or health resources development. Those persons can also, be paid. But like I said, you have to make sure that you budget very carefully so that you don't underpay yourself or overpay yourself either. Thank you.
Thank you for your input. The next question is, are there any financial risk management strategies that are particularly relevant to NGOs operating in unstable or conflict-prone regions?
There are several risk management strategies which I can share, but the one that I shared with you guys was basic because I wanted you to understand the methodical and systematic approach, because sometimes we have a strategy that is very complex and complicated and we want to cut and paste. And you can't do that. You have to first of all define what the issues are. You have to do it on a step-by-step basis. No amount of technology will help you. You have to start with finding out what the risks are first of all. That's the first port of call. Always begin with the basics, and then you evolve into the complex web of strategies. So if you guys need a strategy or strategies, I can send you one, but then you have to find the information yourself. Thank you.
Thank you, Doctor, for your input. The next question is, could you elaborate on how small NGOs with limited staff can practically implement a basic financial risk management system?
Yes, if you have limited staff and you have no one within the organization who is trained in accountancy or finance or is trained in auditing or risk management, uh, you need to make sure that you find someone external of the organization. In other words, you need to find out someone within your community, or you can talk to an organization that is an umbrella body for charities. You can talk to business organizations that actually do work with charities as part of their corporate social responsibility. You can even talk to the uh, one of your MPs or your MLAs or one of your political leaders or something. But there are several people who can give you advice and guidance and who will support you. You may need to pay them a fee, but so be it. I mean, again, you could include in your project either miscellaneous or unplanned costs that could be included in that, or you could have a cost head which says professional fees in every project that you have so that you can allocate funds for that purpose. So you have to be creative and innovative. And as I said, don't be afraid to ask for advice when you need it. Okay, thank you.
Thank you for your input. The next question is, what would a sufficient cash reserve be? Is there a percentage of how much we should reserve based on the project's annual projected cost?
Most funders would ask for, if you have contingency planning, that means do you have funds set aside if the project cost cannot be met, or if there's a reduction in funding, how do you deal with it? I would suggest that an organization should have at least, again, it depends on the size of your NGO, but if you're going for £20,000, you should have at least £5,000 as a contingency fund to deal with any shortfall in funding. Because most times, funders will fund a project which includes staffing and volunteering. They may not fund everything about that project. So like activities, they will expect you to be able to conduct those activities using volunteers and using partnerships, but they will probably fund staffing. So I would say make sure that you have at least 10 or even 20% of that funding as part of your contingency funding plan so that you can be able to ameliorate or alleviate any problems. And that itself helps funders to, it encourages funders actually to fund you because one, they realize that you're not depending on them wholly and solely. And secondly, it also shows that you are not over relying on funders, but you can also be self-reliant. So I would say about 10 to 20% max for organizations generally. Thank you.
Thank you. Thank you, Doctor, for your input. Dear participants, due to time limitations, we cannot cover all the questions posted here. Thank you, Dr. Christopher, on behalf of the entire team and participants. I want to express our sincere gratitude for your exceptional training session and the insightful Q&A discussion. Dear participants, as now we have reached the end of the webinar, I want to thank each one of you for your active participation. Please take a moment to fill out the feedback form for today's session. Your input is crucial in helping us to improve. If you have any questions or suggestions, feel free to contact us at support@fundsforNGOs.org. The feedback form will appear on your screen in a moment. Once again, thank you, Dr. Christopher, and to all the participants. We look forward to seeing you in our next webinar.
You're most welcome, and goodbye, and thank you too.
Thank you.